Hello and welcome to the day ahead. It is Friday, the 18th of March. I'm Andrew Gagan. Well, global markets have marched higher as the price of oil again rises and the Bank of England raises rates. Wall Street gathering momentum into the end of the session, led by energy stocks as investors assess what the FOMC's first interest rate hike since 2018 means for the economic outlook and if it will deliver a hard or soft landing.
This is an unusual market that we're in. It's we seem to have unusual news all the time, and in comparison to on average over the past 10 or 20 years or so, there's been some phenomenal events that have been happening to markets, and markets seem to cope and then not cope. Ultimately, the markets were wavering for a bit as rates were going up, oh dear, and it was only when Powell said, look, there's very, very low chance. Never say never, but there's very, very low chance of a recession. So suddenly everyone was buying up loss-making tech stocks. Probably maybe some underlying positives. None of us really know how Ukraine is going to work out over the next few weeks. You would hope, just fingers crossed, but hope is not a strategy, so you can't really rely on it, that there is going to be peace in Ukraine fairly soon. I think that the war discount on some stocks is now starting to close now.
The Treasury market was erratic overnight as the yield curve flattens but rebounded from earlier lows as the market continues to digest yesterday's first Fed rate hike in 3 years, while peace talks between Russia and Ukraine stagnate, weighing on sentiment. This as the House of Representatives in the States votes to suspend normal trading relations with Russia and Belarus in a 424-8 vote, paving the way for President Joe Biden to enact higher tariffs on more products in a bid to further cripple Russia. Russia, meantime, has hit back at speculation it's missed payments on 2 bonds after some of its creditors say they haven't been received, leaving the market unclear on whether the country is facing its first default on international debt. Let's take a look at the bigger picture. Again, it was all about the central banks overnight. Sterling taking a slide after the Bank of England hiked rates 50 basis points, joining the ranks of its central bank peers in the fight against runaway inflation. However, the dovish tilt of the Deputy Governor voting for no change was the surprise, as well as telegraphing a less urgent need for further tightening. In the States, jobless claims falling back to 214,000 as expected, as was mixed housing reports of an outsized pop in starts but a step down in permits. And finally, the closely watched Philly Fed index rising to a higher than expected 27.4 in March. Well, let's see how this sets us up locally. After a strong session yesterday, SPI futures up around 0.5% on the back of those strong moves on Wall Street. Oil, meantime, surging more than 9% to regain some of the losses of earlier this week as it moves back above the $100 a barrel handle as supply shortage concerns come back with a vengeance. The International Energy Agency saying 3 million barrels a day of Russian oil and products could be shut in from next month, which it says is far greater than an expected drop in demand of 1 million barrels a day from higher fuel prices. A mixed picture for base metals, aluminium rising 4% on speculation of economic stimulus in China. However, nickel plunged 8%, which was the maximum allowed under new rules imposed by the London Metal Exchange. Gold futures price up 1.8%, sitting above $1,940 an ounce. Iron ore up marginally at $146 a tonne. Meanwhile, the crypto market is holding relatively firm, with Bitcoin holding above the $40,000 level. And that is your day ahead. See you again Monday.